Good evening. This is Michael Foligaro with Logical Signals, and tonight I'm bringing the Elliott wave update for the NQ for Thursday, March 11th, 2021. We're continuing to count a counter trend rally, a three-wave rally, to form what I continue to look at as a minor wave 2. And as I have been noting, we have had to continue to allow additional moves above 13,000, and that is exactly what has taken place yet again, in fact, reaching 13,119 this morning. Now, I still am under an impression that the market will turn, but I continue to trade what is in front of me. That's the first thing I'm going to say. So there are opportunities, and if it's buying and then even going against and breaking above levels, yes. And here's why. Because I have also an alternate count, which means, if I need to look at a bigger picture, then I have to allow these rallies to get up to larger levels. And I am going to put some quick Fibonacci's on this to see if we'll put some parameters around what's going on right now before I move on. You can see that it's really broken above the 1.382%. That's, 138% of the A wave is now, that's where these levels are. That's quite a bit, not unheard of, not canceling out the structure in its entirety. But it begins to put it in question because we need to continue to allow for upside. Our next zone is 13,175, we'll call it, to 13,222. And if that breaks, then of course we know that the market, in terms of that this is a wave 2 correction, and what it's correcting, it cannot exceed, because then it's not correcting it anymore. So it cannot exceed 13,326. Should that occur, again, we will be trading what's in front of us, but we'll be on the right side of the market because we can stand back and put different parameters around what the market is telling us it is doing. So we'll continue to be able to count it. We'll be able to use our Fibonacci. Now, right now, those would be my expectations, but now let's just take it further. And I'm going to remove the extensions, change it over, and go to just Fibonacci and just retracements. And I'm going to start from, where are you? Right there. A little bit. And we're going to run it down to that low. Okay. So this would then change the assumption that what we're doing, if we're going to label that an A wave, so this would be A, we're looking for a B wave rally. And maybe we've already done A and B and we're in the C wave. And so now we have 13,254, which would still not be above the top of our current wave 2, but could complete the move. And then if it tumbles from there, we still have both counts in mind. And I'll tell you how that works should it happen. But right now, if it starts to break above 13,328, the next level that it really could contain it is 13,402. And above that, you can't go above new highs. If it goes above new highs, then it changes the labeling again. Not the fact that it's done 3 waves, basically, we can count it as 3 or 5 waves down. But it may have to stretch, because this was it would be a little bit different, but it all would be made by the market and not by anything else. So keeping all of that in mind, my feeling is that the market mood is changing, and you can see that in just how the intensity of the buying. Now, the volumes have not been that great. So again, it's this rotation out of one into another, but it's not, it's just running out of sellers from here, because people are like, okay, well, they may need to turn it and get long. So depending on what's actually happening, the market runs out of, when it gets into its mood, it's just going, oh, come on, go away. That it's going to just be relentless when it goes up can really crimp what you're going to do if you're not getting long. I mean, if you are getting long, you're going to play it and you're going to make good money. That's the other conversation. I don't want to spend too much time on. We don't want to second guess the market. So you must trade what's in front of you. If you're going to go against the market, you have got to start putting these next Fibonacci levels in your head. You must be able to visualize what you are shorting into, the potential of the move. And then you need to continue to watch your moving averages. Because if they're all in alignment, you need to start functioning on higher levels. Because that's where the market is going to go. Things are algorithmically driven. So this is all programmed, and they're just going to do what it's programmed to do. And if that's to put on a certain type of position, which requires buying the underlying, it's going to create a bull market. So it doesn't really change what's happening, but what we're seeing also is just additional, a little bit of exuberance, I might add, because of the COVID relief package being passed. But that, to me, is we're getting way, way, way ahead of ourselves. And I'm going to write about it rather than try to put on a very long video. But initially, what we need to do is continue to let the market tell us, and that's what's going to justify or determine how we trade. The trade might be getting long, and you should be getting long. You're going to make good money, regardless if you believe that this is the end of a move or if the move's going to extend another 100 or 200 points. That's enough to make substantial amounts of money. And you can play both sides, and you're going to see it here. This is the hourly chart. The market started going down in the 10 o'clock hour Pacific, so 1 o'clock in New York, and it basically did it through the close. Those are all opportunities to make money because it dropped over $100. And that's solid money. So everything is tradable, and because these are the time frames. Again, this is an hourly chart. Let me just go over here. Go to the 2-minute chart. That's the, oh, see, even that. You can see these declines are extremely tradable. You're not selling hundreds of thousands of dollars. You're selling 1, 2, 3, 4, 5. Very easily traded. There's enough volume. And that goes for both directions. You're going to see here, this is on the 5-minute chart. This was today, right here. Very tradable up and down. It was quick, you know, all within the first hour, but very tradable. Then I would just buy it, and keep buying it. And when you saw there were periods where all the moving averages, this is, I have to go back, and I can't because, well, I could, but you're not going to see them. In any case, they were in alignment to go up. And that's what it did. You've got the 200, then the 100, and then the 50, now crossing and beginning to go back below the 200, which turns the picture negative. And you can see what happens. It does. Now, if this starts to go lower and this comes down, it's got some distance to come before it smacks into the 200. So the hourly chart is a much bigger boat, takes longer to turn it around. What it's done so far, the market can turn and just rally back above 13,119 tomorrow. For sure, it can. For sure. In fact, this was down 40, now it's only down 19. You know, things happen, but we trade what's in front of us. And we use Fibonacci and our moving averages to determine what we're going to do intraday. These, you're going to get the signals, you're going to see the intensity, and you must go with it. And we'll have intraday Fibonacci numbers set up. These are, again, a little bit longer. These are definitely hourly to daily levels because we're covering all that territory. So you're going to want to change those and put up ones that are more applicable to how you're trading at that particular moment. In any case, tomorrow, keep open. We definitely can head lower. That's not going to be a problem. And there are a couple of ways you could look at it. You could run Fibonacci from here to here, which is going to give you downside. Or you could run them on extensions, which is going to give you additional upside. But here you have downside that has to start to break if indeed this completed the whole move. And we can take it lower and we can see that we get much more support coming off. To do your Fibonacci's for upside, you're going to use extensions. And that's here to here. Oops, no, there, and then down to there. And you can be very exact. And so you get your zones where it can go. Right now, it's sitting between 123.6, 138.2% of the A wave. So that's what it's measuring, because that's what these are going to be related, right? The C wave, if indeed it's a C wave, is related to the A wave. And these are the measurements that come out from that Fibonacci. So we know what we're going to do. We've got to allow for moves to here. If it continues to fly above here, then we've got to flip over to a larger picture and just Fibonacci retracements of going back up. Right now, these are set for a market that will turn and go lower. That's still what I'm looking for. And I'm going to leave it right there. Next update will be tomorrow evening.